Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. In today's episode of Back to School, I'm going to cover the basics of why people dollar cost average versus other trading methods or other methods to get into markets. What I wanted to show you was this week the market opened up on Monday really down. And you can see that by looking at this open here. It dropped from the close of Friday. So Friday closed at 441. The market's opened down and it trended even lower and it ended the day here at 1 - 1.69. And what you want to notice is sure, the last 2 days have been green days, but even this is still lower than last week's um, close. So you can see that the markets are still downtrending. And I wanted to show you how volatile markets can be. They go up and they go down and they swing in either direction. And it's really difficult to figure out where the markets are going. So, what's the purpose of dollar cost averaging versus market timing and versus trading? So, let's go and cover this real quick. Dollar cost averaging is simple. It's most people when they invest are not investing from lump sum. Most of us are investing from our work or our paychecks. So I will go to work for a week or two or whatever it is. You get a paycheck, and then out of your paycheck, you will set aside a small sum to be invested. So that's really the best example. Dollar cost averaging works because in that case, you didn't have $1 million to start with. You don't have this dilemma of should I put all that $1 million to work today or should I split that $1 million into 10 equal pieces and invest a little bit each month? So dollar cost averaging in most people's cases is because you don't have all the money to start with. A necessity or by nature, you're using your future work to be translated into a paycheck and then you translate that back into an asset or an investment. But there's other parts of trading or there's other ways to accumulate assets. If you do a market timing, here's an example of Amazon's chart. If you bought Amazon here, you could have sold it here. You could have bought it down here, sold it here, bought it down here, sold it up here, bought it down here, sold it here, bought it again, sold, bought, sold, bought. So if you're someone who thinks market timing is a feasible way to trade, that's fine. Because yes, if you are really good at it, even if you did it once or twice in the last 6 months, bought here, sold, bought, sold, bought, sold, you could have made money. The problem is if you didn't get back in, you see this? This is a 5 year chart of Amazon. If you bought here and you sold here and never bought back in, and then you could have missed a run up. So there are many things to think about. Some people believe they can always time the market, and if that's your skill, then sure, you can make money on a short term if you always do it right, as long as you catch the long term trend. Most people can't time it perfectly. Sometimes, and I've done that before where I sold something like this and I was waiting to get back in at a cheaper price, and obviously the cheaper price never came and I never got back in. So this is something to think about. The other thing is trading. There are different ways to trade, so I'm not going to cover that. But most people who trade in and out, whatever they're doing, normally they follow some type of mechanical system or some type of a way to tell them when to go in and out. So often that is also goes along with charting or some technical analysis. And because that gives you some type of signal of what's going to happen in the short term. Because what you want to do is follow some type of pattern to say, is it a good time to buy? Is it a good time to sell? And then you're going to, you can follow the trend that way, and that will give you a little advantage. And sometimes that's all you need. In investing, if you can get an advantage that other people don't have, that's what you need. So, what methods do I like? The answer is it all depends on what you're trying to do. I like to teach something simple. In your core portfolio, do dollar cost averaging. It's just easy. And I always say dollar cost averaging is the one that requires no luck, no skill, no knowledge, nothing. Anybody can do it and anyone can do it well. If you want to do other stuff, then those sometimes do require a little bit of skill or luck or some type of system. And those, I don't want to say work or won't work. A lot of it depends on what you do with it. And what I mean by that is track your results. If you're underperforming, or if you're not getting the performance, or if you're not outperforming the market, then you want to reconsider why you're doing it, because it may not be worth your time or effort. Maybe your trading is really not that good. It's okay to say that. Just dollar cost average. You can buy an index fund and do just as well. So I track my results, and I have over 1,000 options trade in 2021 so far. I still have another 3 months of trading left. And I can tell you, I've been profitable, and I don't think I'm in danger of losing or flipping over to the negative for this year. And so what that tells you is, if you track it, you can measure your results. And then from that results, you can determine whether or not you're beating the market or not. So even in these volatile markets like this week, even with I may have a little loss this week, but it's not big enough to impact my profit and what I'm doing. I'm not trading with a very large account. I don't use a lot of my I only use a small percentage of my portfolio just to do options trading, but I do track my results, and I do know if I'm making money every week or I'm losing money, and that's the most important thing. Because if you're not going to make money, again, I always say maybe you should just use that capital to switch it to something where you will make money with very little work. So in summary, this is why I use a blended approach. I do use a different method depending on which type of portfolio or what type of thing I'm trying to do. So I do options trading. I do have a higher risk portfolio where I do buy some stuff, and I do monitor some of those holdings. But sometimes in a dividend portfolio, I don't need to monitor and I don't need to trade. So those are really boring. Those are set on reinvestment of dividends. For other stuff, again, like I said, I use a different method depending on what each portfolio is designed to do. So with that being said, I hope you enjoy this. Hey, let me know what you're doing. Let me know what your thoughts are. Comment below. Give me a thumbs up. Share this with your friend. And don't forget, hey, let's do this together. Let's do this $1 at a time. As always, have a profitable day. Bye-bye.